All right, hey there, good morning, everybody. Christopher Hicks with Texas West Capital checking in with you all about just a few minutes after 11 a.m. Central Standard Time here on Wednesday. What is it, February 3rd, 2021, on a very nice, San Antonio morning here. I'm not sure what the weather's like outside. It was a little cool yesterday, but sure does seem nice. Hopefully you guys get some good weather where you're at as well. Who's here already? We've got Sir Hold, some guy. What's going on, y'all? Hey there, Crypto Mowgli. Casa Courses, what's going on? Nevlusian's here. Data's here. Budman says, so when is Bitcoin going to dump? Well, if it's going to dump, then it will dump when it will dump. We'll take a look at some stuff today. Again, there's no guarantee it will at the moment. We've still got the possibility of further upside that I've been talking about. But I think we're nearing that inflection point that'll, I think, probably tell us most likely whether it'll, go up for one more leg and another new all-time high, or whether, the current, the high is in for now. So we'll talk about that today. We'll also talk about the dollar. Again, guys, dollar rises, everything else kind of falls. I've shown this to you guys time and time again here. I posted some stuff there on Twitter this morning, kind of showing the same thing. Right now, we've got dollar strength against the euro. We've got dollar strength against the yen. We've got dollar strength against the Swiss franc. Together, that makes up over 70% of the weighted value of the DXY. What that means is, as long as the dollar continues to gain in strength against these, which it looks like it is, there's no reason to believe that the DXY hasn't bottomed yet. We'll continue to watch that. 95 handle is the next kind of area for the DXY to get through to really, that's the large wave 4 on the way down. So if we can get above that, that should leave little to no reason to believe that Bitcoin's going any lower. Oh, I'm sorry, Freudian slip there, that the DXY is going any lower than what it has already. But again, we'll take a look at that here today. Let's see. Hey there, checking in from Mexico. First time seeing me. This is Multi-Amarant. Okay, good to see you checking in. Glad to have you here. Hopefully you'll keep coming back. Budman saying, excuse me, in addition to the when is the Bitcoin going to dump, saying since the DXY is looking really strong right now. Again, we'll see. We still need some real impulsiveness. We haven't really had that yet with the DXY. So I'm still kind of on the fence right now. We've done some things that we wanted to do. We got above the local wave 4. We got above the descending channel resistance. We're just kind of hovering right above that right now, though. I want to see some real impulsiveness to kind of make me feel better about that bottom possibly being in. Hey there, 51. What's going on? LXT. Scott's checking in. Scott Melker. Many of y'all follow him. He helps us out over there in Discord and whatnot. Great guy. You should be following him nonetheless. Hey there, Block Tech. Good to see you. Checking in. Casa Courses says Bitcoin's never dumping. I hope you mean that tongue-in-cheek. It's always got to pull back. It never doesn't. The question is it going to pull back now, or is it going up for a little bit higher, toward that upper 40s level, excuse me, before pulling back? That's really the question right now. Hey there, Ross Mark, good to see you. Connell, what's going on? Says, can you talk about the impact you expect the Ethereum launch on the CME to have? Sell the news. I mean, again, that was the big thing, right? I kind of mentioned that the other day. I saw a lot of people that were very bearish about the CME getting involved in the Bitcoin there back in 2017. But I see a lot of those same people right now talking about how great it is that the CME is getting involved with Ethereum now. And how do you rectify, how do you have such a strong opinion and then all of a sudden you change the same thing happening and you change your opinion? I don't know. I think it's more emotional than anything else. We'll see what happens. I mean, it gives Ethereum price more more validity, I guess you could say, because it opens the doors there to play it with paper. But again, it's the same thing that we talked about back in 2017 at the top there. Everybody's convinced that it's because the CME came in that the CME, that Bitcoin dropped, but it's not. Bitcoin was at that run. It was at the last wave, the end of the last wave there. I mean, we saw all this coming. We discussed it in TWC there during December about the top being in. mid-December there. So, it's not that these things cause it. It's just that, like right now, we've had this strong advance. Ethereum's making this new all-time high, right? After a strong move up from March, 10 to 11 months here. You've had 10 to 11 months of move up and no real pullback yet. So, I mean, it seems to me that we'd probably, if you're a bigger player coming in, you're not thinking, oh yeah, it's great to jump in at the top of 10, 11 months of a significant rise, where you're up multiple times, you're not thinking, oh yeah, it's a great time to buy now. You're thinking, I think I'm going to look for a pullback. Your bigger players generally buy the pullbacks, guys. They're not in a rush. They're not in a hurry like y'all are. They've already got money. They've already got the wealth. They've already got the capital. They're interested in protecting that first and then growing it second. So if you're worried about, if you're interested in protecting it first, you're going to look for a bit of a pullback. I know that, that there's all the retail nonsense, oh, it's never going, never going to pull back and buy the dip all the time. But you got to be smart about it, guys. Buying the dip is a great way to get into a market if you don't know what you're doing, unless you start buying the dip near the top and you're older. You need those two things, because basically the idea is markets tend to trend right and up. Okay, so they tend to go right and up. So the idea of DCA and dollar cost averaging in is that price is going to pull back along the way, but eventually it's going to continue up higher. The only time DCA isn't very smart is if you are older, if you're 40s, 50s, and you're starting near the top of a cycle. Because what that means is you're starting your dollar cost averaging at the top, and then you have to wait for the cycle, the down cycle to work its way through, and then to come back up to where you got in just to break back even. If you're young, if you're 20s, that's fine. That's not a problem. As long as the market continues to move higher, eventually you've got time on your side. But the older you are, the less time you have. And so that's when it becomes, dangerous. So yeah. So what's going on with Ethereum? I mean, to me, it seems like more of an opportunity to sell than to buy. Just because, again, you've had this incredible, rise since March. I mean, that's a big generalized statement. It doesn't mean price can't go up higher first, a little bit higher first or anything. But when you look at the rise, in Bitcoin, in Ethereum, and in everything, stocks since March, and the lack of any real pullback, that should make you much more cautious if you're new and trying to get in now. So, hey there, Esteban. Good to see you. Any idea when I'll be implementing the alerts for hot takes? Hopefully within the next... I'm going to try and have it done this weekend, but if not, it'll probably be within a week after that, I think. I just need to make sure I get it all set up in the most efficient manner. And that way we kind of let you all know before the breakouts happen to be paying attention to those setups. So that way you're alerted ahead of time, not just when it breaks out and you go, oh my God, I got to get in. No, we don't want you to do that. We want you to definitely note before it breaks out so you can, check and see if that's something that you may want to enter. So yeah. Hey there, WhiteR21. Good to see you, Crypto Girl. Hanker here. Sylvia, what's going on, man? Ice beer there in the Netherlands, huh? Hey there, Bill. Good to see you, buddy. Let's see here. Everyone from Lockdown the UK and our health secretary very excited about the Contagion film on Netflix. Well, I hope you're doing well, Bill. I hope you're doing well. Man, I'm gonna totally screw up your name, and I do apologize ahead of time. Can I just call you what appears to be your last name there, Hassan? I really don't want to wreck your first name there. So glad to have you checking in. Amberly is here as well. Hello to the both of y'all. Brian Riley, AC Webb is here. Let's see here. You like my beard there, E-Pete? Oh, man. Appreciate it. But anyway, yeah, guys. So, these are the kind of things we're looking at. I'm not here, again, we're about to start looking at stuff here, but I just want you to understand, guys, especially if it's your first time, I'm not here to convince you that what I think is right, what's going on, where the markets are going. I'm here to let you know that, listen, 25 years of doing this, the only way you stay in is because you figure out something that works, okay? The way that I look at the markets works for me. And the best I can do, as with anybody else out there, is to share what I know. This is what generally happens. This is why these things happen. This may be signaling that a top, whether local or larger, may be in. These are things you want to do, but none of these things altogether say, oh yeah, it's got to drop tomorrow or it's got to reverse tomorrow or anything like that. So pay attention. Hopefully you're getting a lot more out of this, more understanding of the markets than anything else when we do these things. What's up, Chronic? Good to see you. Hassan, I appreciate it, man. Thank you. Yeah, I really just didn't want to butcher your name. Much more respectful than that. Let's see here. But anyway, I would be careful, again, being too much into anything. I know a lot of people, I can understand the argument, guys. As a trader and investor of Bitcoin, I definitely can. But having the education that I do, I've got a couple of master's degrees and a law degree. Everything kind of, comes around economics and finance and psychology and philosophy, ideas of power, stuff and all this stuff. And so I've got that, plus I've got experience and in seeing how things happen. And so I just want you guys, I want Bitcoin to work as well. I want it to go up and to do well also because we've got money in it. We want to see it do really well. It's done really well for us since we got back, I say we, me and the mouse in my pocket. But since, 2017, the beginning of 2017 there. But I'm also not going to blow smoke up your rear end and just talk to you emotionally because that isn't going to help you any. People are very emotional about silver. They think it's in a new bull run. I don't think so. It does not appear to be that way. I get a lot of people telling me it can't go below 10. I think they're going to find out the other way. Gold, everybody wants to be bullish about that. But again, we're still looking for it to come on down there around $900. Stock markets, everybody's all bullish about that, but they're missing all the euphoria that's going on. The euphoria and stuff that you feel, all this FOMO you guys feel because of everything you're reading, everything is going on. This is stuff that happens at the top of markets, not at the bottom. Now, that doesn't mean, again, that things, reverse tomorrow or anything. But what it means is you need to be paying attention at it. So that way, if you've got profit, you're smart enough, you pay attention enough to be able to lock that in rather than losing it all and potentially taking a loss. Which, guys, is honestly what happens most of the time with new traders. They'll be in profit and they'll just be FOMOing and feeling like, man, it's got to continue going up. It's got to continue going up. They have no clue what they're doing. Price drops back down. Then they're scared to sell because now they say, oh my gosh, I lost all that profit I could have had, rather than paying attention to all the profit that they still have. And then so they don't sell there, and then it keeps going down. Next thing you know, they're negative, and they're losing money on a trade that there were so many opportunities for them to make money with. So you guys got to be careful with that, okay? Hey there, Sparl Architect. Good to see you. Let's see here. Mr. Densley, you said your dad always said that with the mouse in the pocket comment. When you say it now, no one gets it. Oh, man. The Reddit army is coming to Bitcoin. Oh, Lord have mercy. Yeah, again, Casa courses, man, I would just suggest that you not be so emotional, really. I mean, again, there's the possibility it may run up here, and we're excited about that possibility, but we're not going to ignore the other reality right now, which is we are in a bearish market structure since January 8th. So almost a month now. So we've got, Bitcoin's got some moves to do, and that's what we're going to look there. Anyway, guys, hey, listen, real quick here. Join us at howtotradetowin.com. We'd absolutely love to have you here. We've got such an amazing group of traders in there. Some of them started with us. Some of them already had skills coming in. Some of them you may follow online. Crypto ISO, 2000X. We haven't had so much of Trader XO stopping in lately, but when he gets a chance, because he's doing all of his stuff and really kind of doing well there, but when he gets a chance, he usually stops in. Of course, we got Scott Melka there. And others, guys. You're going to see a lot of people got French bull. We've got, so many people going on there. But the good thing about it is we've got people from all over the world, so our channels are usually pumping throughout the nights here in the U.S. anyway, while I'm sleeping. So you've always got some information there. So anyway, Tier 3 is where it is, guys. Tier 3 gets you everything, gets you weekly educational stuff. By the way, if you're Tier 3, don't forget today at 4 p.m. Central Standard Time, we're going to have our live stream, and I'll teach you all another technique that you can use to make money without even understanding what's going on in the market. It gives you an entry, it gives you an exit, it gives you a stop loss. You don't even have to think about it. And then, of course, we've got all our other educational content, chart requests, all that fun stuff. So come on over there, guys. We'd love to have you there. Let me see here. We got multiple charts here. What's going on? All right. Hey there, TTXRN. TTXRN. Good morning. Good to have you here. A lot of T's in there. Blockchain Gains. What's up, man? Wazobia is checking in as well. Good to see here. Hassan says the same thing happened with them. Lost 90% of the capital when it was in profit at the start. It happens all the time, guys. The one good thing I think that you get with me that you don't get with a lot of other people is I've been very successful with what I'm doing, and I've never actually had to work trading for anybody else. I haven't had to. And so, again, what that means is I still remember back to when I first started, just like y'all, and lost a lot of money in the beginning. Almost 20, going on 26 years now. And so, probably lost a lot more than most of y'all will ever lose, which is good for you, not so good for me. But, the only reason why I'm still doing this now, guys, is because I decided I wanted to learn how the market works, what's really going on there, and get off of the way that we tend to think when we're first new traders. Things seem to make sense, but it's only because we don't really understand what's going on. So, the internet is filled with a bunch of half-truths and all outright lies that sound really good. And then you have a lot of emotional cheerleading going on, and it's hard, man. It's hard. It's hard to make $1, right? Or worse yet, it's harder to keep $1. So, anything I say here are things that I've been through, guys. I know firsthand. I still remember today. Okay? So that's that. Right now, what are we looking at? So we've got this potential bearish count. We have our count come up here, a 1, 2, 1, 2. If price is rejected prior to this swing high up here at 38,570 and 13 cents, if it's rejected prior to then and heads up down below here, the swing low at 32,200, this count should be pretty valid. Basically, we're looking at an A, B, and then this ending diagonal here for a C. As I've been talking to Discord about, we've been looking at this move up into initial target was the daily, this blue daily supply structure here. Secondary target was this 4-hour supply structure up here. And so, again, we've been riding this up. Here we are now toward the top there. I had the TD sequential on there because last night with our daily evening update, I had mentioned to them, we were right here around, I guess probably around 7 there, or 6. I had mentioned that, we could potentially see the 4-hour hitting the TD9 sequential sell there. And whether it does anything or not, usually, usually the 4-hour 9s are pretty good. You've got, price went up just a tad bit higher than this one here, but then you really mark the top. Came back down. You had a 9 on the buy signal down here. You had a 9 near the top up here. You had a 9 at the top up over here. So, it's something to watch there on the 4-hour. And it is possible that we can get this move up here. And so you still get a lower high here, but then you get right here, but then you get a higher high here potentially on RSI. And that would give you hidden bearish divergence, which once confirmed would tell you, okay, continuation of this downward trend. But until that happens, we're still watching it. We got to see what happens here. If price advances through this descending channel resistance, the pattern target based on the height of this channel here is $11,000. So if it was to break here, say right around 37,800 there or so, you'd be looking for a target of about 48.8. Now that in mind, keeping that in mind, what you still need to see is a move above this swing high first, which is right there at 38,570 and 13 cents. And then you need to make sure that price continues up above this swing high here at 40,100 127 and 66. I think if you get through both those, there's very little argument for it not making that 48,000, maybe 50,000, because it's so close to 50,000 at that point, all-time high. But I think this would be your fifth wave going up then. I think this would be a 3, this would be a 4, and that would be a 5 going up. I do have a 5 count right now that that you can get a 5 coming up off the March lows. This works out perfectly well. You zoom out here, the count works. But again, until we continue getting this decline down, it's still vulnerable to higher up. So right now we're playing what's going on here. So again, if you were in Discord, we were talking about long over here, at least around 34, coming up here, doing great so far. Up almost what, $4,000 almost, $4,000. But now we want to see, okay, do we get rejected at this supply structure area here? That's what we want to see now. And so if we do and price comes back on us, what we're really looking for, usually it's your wave B. So if this is an ABC, the decline through wave B is really where you want to say, okay, well, most likely that tops in. But prior to that, you can look at your wave 4. So if this count is correct as an ending diagonal, that means we would need price to drop here below 34,403 and 73 cents. And that would be your first clue that, hey, the top's probably in. Now, if we look at that and that's coming down, that'll probably take us below this ascending channel here. Which, by the way, if you look at the EQ of this, it works out really well. Let me kind of pull this down a bit here. There we go. Again, you got a touch of the bottom, touch of the top, touch of the bottom. And so this EQ works really well here as resistance. Right here, as you can see, in support. So a breakdown of this support here, of this channel support, would get you a target of about $8,000 below the point of breakdown, and that's based on the height of the channel. I mean, that's your big picture thing right there, guys. If you lose this channel support, you're probably looking at about $8,000 move down. Now, along the way, you want to make sure first that price gets down below the pivot on the 4-hour here and gets down below the swing low. You've got targets you're still going to look for along the way. But if it does those two things, then it increases the odds significantly that you're going to get this move down here probably to around 26, 27,000. Now, depending on how long that takes, that might or might not drop you below this large descending channel here, which looks kind of flaggish. If this channel breaks down, this large channel support here, then again, you've got about an $11,000 target below the point of breakdown, and that's based on the height of this channel. So if you break up and through here, your target's $11,000 up. If you break down through support, it's $11,000 down, which takes you around a $15,000, $16,000, $17,000 area, depending on how long that takes to get down there. I know a lot of people don't want to believe this is possible or that it's going to happen, but I'm not here to coddle emotions or to get you to trade emotionally. I'm here to get you to pay attention. Nothing here says this has to happen. You have to have the breakdown here and here. But as a trader, you need to be aware that if you break down on that local channel, there's your target. And if you break down on this bigger channel, there's your target. Those are your big picture ideas. Now, you got to watch, price action as it plays out going down there. But nonetheless, if you are not aware of those possibilities and that actually plays out and you continue buying the dip, how much money do you have to buy the dip? How far are you going to continue buying the dip? Are you going to continue buying the dip down to 20,000, 18,000, and then by the time it gets to 16,000 where the target is here, are you going to sell? Because that's usually what happens, guys. Usually retail is buying up here at the height of FOMO and selling at the height of depressiveness. Where they believe, they finally give up, just go, man, I just give up. And then they get really frustrated because, man, first they bought at resistance and then they sold at support. So we're trying to help you guys recognize what may be going on, possibly, so that way you're not caught up in that. I'll move these out here a little bit. But notice, I want to make sure you guys, especially if you're new or you're very emotional about Bitcoin, notice I have not at all said that any of this is going to happen, any of it up or down. I said we are watching for price action to tell us what's going to happen. Now, if you remember, I've made a big deal right now, about this volume and price action here. And again, I've got a lot of people who are very emotionally bullish about Bitcoin refusing to pay attention. There is a significant spike of volume in this final candle that produced this all-time high here, after this advance of almost 10 months, with very little in the way of pullback. This is a warning sign that heavy supply is coming in. How do we know? Because look at the height of the volume bars here. Look at how much more volume came in January than it did in December. But look at the candle spreads, the bodies of the candles. Look how large this candle spread is in December with this small volume. And you have this large volume of, 40 to, almost twice as much volume there. And yet the candle spread was like a quarter of it, a fourth of the previous. So it tells you you've got a lot more trading going on, but a lot less result on that advance. That tells you that there is significant amount of supply coming in up here. Okay? Now the other thing we look at is usually if we're looking at pivots, if you move in sideways between a pivot and the R1, and you hit that R1, usually that results in a pullback toward the pivot. So you kind of hit the R1, you get rejected, you come on back to the pivot, check it as support, and then you continue up. You can notice that the pivot here is basically the all-time high right around 20,000, 21,000. So it makes a lot of sense that it would at least pull back there potentially before heading up higher. Potentially. There's nothing saying it has to stop there either, though. If it falls through that pivot, you should be looking at least at the S1 pivot. So now you're looking at 12,000, 12,200. And if it continues down through then things start getting a little dicey. You kind of hit this $6,000 to $7,000 area. That's your kind of your last area of support really there. Your last area that you want to see a bounce from if you're bullish. If you're getting through that 6,000 or 7,000 area in general, I think you get a bounce here in this wick, toward the bottom here, but I think overall it ends up making a new low. But that's a long way off still. There's a lot that could happen before then. But you need to understand what's going on. So we'll see. We'll see what continues to happen here as it plays out. But the idea is that you need to pay attention to this price action and volume comparison here and what's going on. You need to make note that there's a ton of supply coming in. Yeah, there's this bearish divergence here since the 2017 all-time high. To me, that's secondary to what's going on here with price action and volume. This could still continue pushing up and, still print bearish divergence or even head up higher than close above 96.22. And if it closed above it, then it would, invalidate the bearish divergence. Right now it's at 86.21, as you can see right over here. Put it there. So, you need to pay attention no matter how you look at this, whether it's via pivots, price action, and volume. I mean, you need to note, when it comes to pivots, what, generally happens. Now, if we continue up through this all-time high here and we get rejected the R2, then still there's the case for at least a good pullback toward maybe 20, if not 12,000, something like that. If it continues closing above the R2 and continues pushing up, I think it's going to run the pivots here. And that takes you up there almost 100,000. Because when you trade pivots, this is usually the way it works. If you're coming in sideways between the pivot and the R1 and you continue up through the R1 and the R2, usually that just tells you you're extremely bullish and price is going to run your pivots all the way up. But this is the monthly, so that's not going to happen overnight, guys. Most likely. We know how fast Bitcoin can move. Again, guys, I'm not here to tell you that price is definitely going to come down or that the top is definitely in. I'm here to have you pay attention to the things you should be paying attention to and what they mean and why. Locally, we're here at the 4-hour supply structure. 4-hour Stochastic RSI is pushed up into oversold or overbought. We have some slight bearish divergence right now between the February 2nd there and today. Right here. So, if that confirms, then this would, be a 1, 2, 3, 4, 5 up there. Excuse me. Get your C done and potentially come back. So, definitely something, to continue watching with all that. And see, these time frames, the channel stuff moves here when you're changing time frames sometimes. Let me see if we can get this back on there real quick. There we go. All right. So, I mean, that's kind of where we're at there. We've got this red ascending channel here. Now, one thing you can maybe do if you want an earlier note than back here, you know, wave 4 down here, you could probably draw you in this support line here. And then, of course, you know, you basically got this kind of thing going on. So you've got this kind of wedgish shape going on here. So if you're dropping through this support, I would be careful about longing at that point. That's a good indication, you know, locally that local top may be in at least. If you continue down below wave 4 here, more evidence. You drop down below the pivot, there's no reason you should be thinking about long at that point, especially if it continues down below the wave 1 over here. At that point, you're really just looking lower and lower and lower. At that point, your next low here becomes this swing low here at 29,156. But the thing about that is it's already the proximity of that to this low over here means that if you're getting toward this area here, you're probably going to drop below that swing low, which then opens up further downside because your structure is high, low, lower high, lower low, lower high, and then you'd have that lower low. That bearish structure just continues. So, you know, these are what we're going to watch, short term and long term, or, you know, midterm here, guys, as it plays out. Let's see here. What are my thoughts on all of the Bitcoin leaving exchanges? You know, we've talked about this before. You know, prior to the last year, you know, prior to really, I guess, 2019, people used to keep a lot of Bitcoin on the exchanges. And then we saw some of these exchanges go belly up. You know, we had Cryptopia, their thing happened. And then we had whatever that one was up there in Canada where the guy died, the head of the company, and he had all the cold storage passwords and whatnot. And so we saw that happen and people not able to get their money back, their Bitcoin back from that. And, you know, and Max Kaiser's pushing his, you know, not your keys, not your money kind of thing, not your Bitcoin. So I think a lot of the money leaving exchanges, one, has to do with that, because we've seen over this last year that when price gets ready to dump, it just comes flooding back onto the market, just like that. So we've seen that happen. Yeah, everybody talks about how cheap it is to move Bitcoin. Well, yeah, if it's that cheap, there's no reason to keep it on exchange if you're looking to move the bigger movements. The other possibility, everybody talks about Grayscale. They missed it, though. They say Grayscale is buying all this new Bitcoin. Most of the Bitcoin that comes into Grayscale, you can look at their SEC filings, are from people who join the GBTC fund there, and then they pay, rather than paying with cash, they pay with Bitcoin. So they lose their Bitcoin. It goes into, you know, GBTC's thing, but they get the shares of GBTC. And again, the big players do this because of the arbitrage. So they can make money on the premium. That's what they do. You know, you do that, you buy some short options, man, you're good to go. And you can consistently make returns. You've been able to consistently do that. And that works as long as that GBTC premium continues to stay up. But that premium has been crashing over the last few months. And so it kind of puts up there, well, is it going to continue now? Because I think once you do that, you know, once there's no reason for them to do that, you know, there isn't a lot of reason for these funds and everything to come in and to continue to, you know, put their Bitcoin into GBTC, you know, and do that whole thing. So, you know, some of this leaving, these larger amounts leaving, maybe going into GBTC that way. But again, you know, when the premium drops off, if it does, you know, it doesn't come back, there's really no, that arbitrage play is no longer there, which I think you're going to see a strong decrease in the inflows into the fund there when that happens. So yeah, right now, you know, your big guys are making money the easy way. Stick it there. You get in there cheap. You have a premium built in. So you put it in. You've already got profit. And then you just protect your position with some options. Some short options. You're good to go. It's easy money. Let me see here. Central banks and government regulation fear. Let me see here. let me see here. I'm not sure what you're saying. Are you saying that people are fearful of central banks and government regulation? Actually, government regulation of Bitcoin would do a lot to increase, to me, the odds of it going higher and higher and higher. Unfortunately, depending on how much government regulation comes in, the little guy may be kept out. It's like hedge funds. Here in the U.S., you cannot put money into a hedge fund unless you are unless you're qualified, unless you're basically making $200,000 or more a year for multiple years now, or you've got a net worth of over $1 million, excluding your primary residence. If you can't do that, then legally you can't get involved in a hedge fund. And I can see the government regulation coming, it's just to protect you, right? I can see them coming in and potentially doing that, which is great for the big funds and whatnot, because guess what? They are making money off of you. You set it up, you got this pushed up there, and now they can enjoy it, right? So that could definitely come in. I think lack of regulation is more detrimental to price than anything else. We know that in regulated markets, price tends to rise because you make it more difficult for other people to get in. And so, but you make it easier legally for the big funds and stuff like that to get in. They've got all this legal stuff they have to watch, guys. They have to have custodians and all this other stuff that they have to do. So it's a lot more difficult for the big money to come in. But the more regulated the space becomes, the easier it is for them to come in. So, there's your trade-off with that. Central banks, I don't know. I think you're only worried about inflation if you don't understand it. I think that's really what it is. I've gone through great lengths trying to explain deflation and inflation and all these things to everybody and explaining to them why QE is deflationary and not inflationary, like your crypto Twitter memes suggest. Just because, the memes say it, guys, doesn't mean it's true. As a matter of fact, most memes are wrong. You guys know that, right? But more so, especially when it comes to finance and economics and stuff like that. But, at the end of the day, big picture here is everybody's saying, the U.S. is printing all this money. Well, you've got to look at that in relation to GDP and stuff like that. And if you look at a few metrics like that, you'll find out that the dollar sits well below the Bank of Japan, that the Fed sits way below the Bank of Japan and even the ECB over there. And your currency's value is derived from its relationship to other currencies. Not just the printing that goes on. Everybody can print more, but if the U.S. is printing less, or if less money is making its way into the economy than the other ones, then the dollar's going to fare better. It's going to gain in strength against your other currencies out there, which the dollar gaining that strength there becomes deflationary. We know, again, if you pay attention, we know that credit's been paid off this past year. I actually posted a link here, something I've talked about before. I posted a link for our Discord members. Let me see if I can find it here real quick. By the way, no matter what tier you join us with there, you'll get access to the Macroeconomics, Finance, and Money channel that we have. And so I posted some things in here. Here's the chart I want to show you real quick. At the end of the day, guys, you have to understand what you're talking about. And so the U.S. and, pretty much every other country out there are debt-based economies, which means in order for them to continue to do well, they have to have an expansion of credit. If credit contracts, that is deadly for them. It's very harmful. And so that's what QE is supposed to do. QE is supposed to increase that credit. It's supposed to get banks to lend more. All right. Here's what we actually have. This is from just from 1973 here. Look at this rise. This is loans and leases and bank credit, all commercial banks. So this is the expansion of credit, and this is just from 73. Huge increase, right? And you see here, you had this contraction of credit here after the GFC, the Great Financial Crisis here, and then went back up. But what do you notice here, where we're at right now? Gotta pull this over here some. You notice we're still declining off the highs from May of 2020. Credit continues to contract. The number of the amount of loans and leases in all the commercial banks there is continuing to decline. And when you dip into these other numbers here, what you find out is people are paying them off. And when you pay off loans, you're actually destroying dollars. You're increasing dollars. It's not what the Fed prints, it's what do the banks print. That's where your money supply really increases there, because that's the money that goes out into the economy and circulates, increase that velocity. So if you have less people borrowing, and especially at the same time more people paying off, not only do you not have inflationary in terms of credit expansion, but you have a deflationary effect going on as dollars are destroyed because people are paying off their debt, which is, again, what has been happening for almost the past year now, 6 to 12 months. People are paying off their debt at pretty much record levels, people and companies and whatnot. And that is completely against what the Fed needs for the economy to continue pumping up. It's all fake. Again, it's the idea, the economy continues pushing on right now because the Fed manipulates the market via the yield curve, via interest rates. It distorts risk. So there's a lot of what Austrian economists would call, I just forgot the term of it. Malinvestment. There we go. Malinvestment. So malinvestment being money that goes into wasted things. It's wasted money. It's again, when you look at things like zombie companies that are not profitable, but are still increasing in value. They're getting money coming in. They're being kept alive. They're zombies. They shouldn't be alive, but they are. They're being held by the money coming into them. And you get things like that. That's malinvestment. That's money that could be spent, that could be better spent elsewhere, but instead it's being wasted on a company that should be dead. So again, a lot of these concepts that go in here goes a lot more beyond the whole, money printer goes burr kind of thing that everybody, even the larger accounts you guys follow online of seemingly successful people, show you. It's a true misunderstanding of what's going on. So, but this sort of thing comes in at tops of markets, and we're looking at a grand super cycle top here, super cycle top. Anyway, you're looking at basically a 90, 100-year cycle here coming from around the time of the Great Depression, coming to a head here. You look at things that is going on with Wall Street bets, and and they talk about, we're sticking it to the man, we're making we're making the big funds pay, and all this, and while that's directly financial market related, it's a bigger testament to what's going on everywhere. Because if you remember last year, you had riots all over the world, you had protests all over the world. You're seeing it now. Look at the Netherlands, the government there, just kind of gave up and said, "Well, we screwed up. We're sorry. We're going to step down now." And you have all this going on, and then you have what's going on in the financial markets, and it's all just a big socioeconomic event. As I continue to say, the way the markets move are based upon what the general market participants are feeling. And they're not feeling too happy about things at the moment. So, again, when we look at markets and topping, and we look at it overall, because, again, if the dollar is going to continue to rise, there's little reason to believe that anything else is going to rise. Because as the value of the dollar increases, as the DXY goes up, that means it takes less dollars to buy the same thing. You guys are great with inflation. You say, oh man, look, more dollars being printed, so prices have to go up. Well, it's just the opposite with deflation. Less dollars coming out in, again, we talk about destruction of dollars via pay downs of debts. We're talking about lack of expansion in credit, less and less people taking out credit. And so those two things combined, of course, really kind of gives that going. But it's the same idea. If there's less dollars, if it's deflationary, then the value of things are going to go down because the value of the dollar is going up. So it takes less dollars to buy those things. So when you look at it that way, you go, okay, well, how the heck is Bitcoin supposed to rise if the value of the dollar is rising? So all things held equal, if the dollar is rising, anything denominated in a dollar should decline. That's all things held equal. I can see a possible scenario in which in which there's so much demand coming into Bitcoin that price is able to overcome that deficit and push up. But you have to ask yourself, where's that going to come from? Is it going to come from you and me and the average Joe out there? Because we're mere minnows, right? It would have to come from large funds and institutionals and coming in. The problem with that is these guys and gals, their first goal is to protect their investment, as I keep trying to teach you guys. The second goal is then to grow it. So if you're attempting to protect your investment, if you're trying to protect your wealth, and you're in an asset that's declining in value, think about it. Dollar goes up, Bitcoin price value comes down, which means what you're holding, your wealth that you have in Bitcoin, is losing value. If that happens, they have no reason to stay in Bitcoin. And you're going to go, oh yeah, but it's going to go up eventually, whatever. Well, yeah, maybe. But you're talking about your $100 or your $1,000 versus their tens of millions, maybe hundreds of millions of dollars. There's a big difference in that. Okay? Remember, in general, your larger money, your larger professional money doesn't view things the same way you do. That's what I keep trying to teach you guys here. They think of it another way. So you can't use your normal thinking that you would do and go, oh, but man, yeah, but it always goes down 80% and then it goes way back up. Well, that's great and dandy, but for them, that's a tough thing. And it becomes even more, right now everybody's talking about this whole Saylor thing. Saylor trying to get all these companies to put Bitcoin on their balance sheets, right? On their treasuries, right? So what's the problem with that? Well, the problem with that, as I posted in Discord here, is, let me see here. Well, you can look at two articles here, guys. They're two great articles. One here, and then we have one by the World Bank, by the VP over there in the World Bank, right here. Read those articles. Those are a great explanation of deflation and credit crunch and how the central banks really have no way of fighting it. But at the end of the day, what it means is, let's say you're Michael Saylor and you issue $650 million worth of debt instruments. Oh, wait, yeah, that's what happened, right? So if it's debt, that means you have to pay on it, right? Now, the problem with a rising dollar value is that it means your debt is becoming more expensive. You have to pay your debt with more expensive dollars. So all of a sudden, the only way his thing works is if there's inflation, if there's this rise in inflation, so that he can pay back his debt with cheaper dollars, that MicroStrategy can. If they cannot, all of a sudden they've got excessive extra force pushing down on them, because now they're in, first of all, potentially in an asset that's declining in value, and at the same time they have to pay with more expensive dollars. So they paid when they issue the debt. They're agreeing. They're saying, listen, we're going to pay this much over time for this debt, right, to pay it back. The value was whatever it was at that time, the 650 million or whatever. If Bitcoin were to drop in half, all of a sudden, that $650 million value is now only $325 million. And instead of paying back with $1 for every dollar that they borrowed, they maybe have to pay back with $1.25 or $1.50. So they lose value, and they have to pay more in terms of what they're paying on it. They've got to pay it with more expensive dollars. And this is why it's so dangerous. So companies like MicroStrategy and others cannot afford to do that. They can't afford to take the loss for a couple of years having to pay back that debt. They may try, but it makes little business sense in terms of that. And so then the question becomes, if that's the case, MicroStrategy and others, will they then offload? I mean, it makes sense that they would. It doesn't make sense that they would continue to have to pay back all that debt, which is now worth so much less than when they bought it just recently, and they have to pay it back with so much more expensive dollars. That makes no sense. In addition, the value of their companies are going to drop. Remember, I pointed out, I showed you the map, I showed you the chart of MicroStrategies and how at the top, at the height of the 2001 dot-com bubble, they were one of the highest flying companies, and they came crashing back down. Is this maybe a setup for the next thing? And if it's not just them, if it's others that believe in what they're saying or whatever, and they do it, does this then create that whole click at the top that sends everything tumbling down? We also know that many of the new larger investors, they have outright said, listen, we're entering Bitcoin because we're concerned about possible inflation. Now, what that means is, if they get deflation instead, what they're not saying is, what they are saying but not actually saying outright, is that if a deflationary event happens, they're almost assuredly going to get out of Bitcoin because it's not doing what they're in it for. They were in it to protect against inflation. So again, if there's deflation, then the value of what they have is dropping, and they're not protecting their wealth. That was the whole idea of getting in, was to protect their wealth. So it goes a lot more, this goes a lot further beyond the whole, money printer goes burr memes, guys. You've got to pay attention to these things. Let me see here. So don't you think they will protect the value of Bitcoin from falling down? How can you protect it? Your assumption is that they're just going to keep on adding ad nauseum until they're out of money. Why would they do that? Why would they, if the value of Bitcoin is dropping already, if in that scenario, and the value of dollar is rising, why in the world would they continue to put more money into Bitcoin to try to protect it from dropping? The writing's on the wall. The value of the dollar is rising. Everything else held equal drops in value. This is non-negotiable. This isn't something that, you want to see it one way or the other. I mean, this is the way things work. So why in the world would they continue to put more money into a depreciating asset when they could put it into dollars? Or they could put it into TLT or something like that, and these investment grade securities, these treasury bonds there, and protect their wealth. Not lose any value at all in it. They won't grow any value in it, but they won't lose it. Why would they continue to put it in Bitcoin at that point? That doesn't mean they can't go back in later. Bitcoin, everything happens and goes down, then inflation comes in at some point. But I'm telling you guys right now, I think we've got deflation, then stagflation, and then inflation. So it's possibly quite a while before you get the inflation you guys are thinking about right now. So why in the world would you waste your money putting it into something like Bitcoin or gold or anything else that might decline in value during deflation? It doesn't make a whole lot of sense, right? Anyway. Well, it looks like Casa Courses is very emotional about their Bitcoin position. I would just suggest you guys not be that way. Again, we hold Bitcoin because we're looking at the possibility of longer term great investment, right? But I'm not going to be completely blind to what's possibly going on around us. I'll leave that to the emotional people out there. I'm not willing to lose money on something like that. Much more willing to pay attention to what's going on there. Hassan says, but if they dump it instead of just holding it, there's a chance that they might face a bigger loss. Well, again, the idea is they want to get out. Here's the thing. Let me go ahead and pull up. I got to get out of here, but let me look here real quick. Here's the dollar, guys. So the dollar right now, got to pull this up here, has done two things, all right? It's done the first two things we needed. It's gone above the local wave 4, and it's breaking out, currently attempting to break out of this descending resistance, which has been in place since March. This was the height of this. Now look what happened here. Look at this. This is a rise here, guys, from the 9th of March to basically the 20th of March. This was an explosive move up here of almost 9% in the value of the dollar in basically 10 days, less than 2 weeks. Why does this happen? Because when there is a problem, when the large people of the world believe that there's an issue with the economy and whatnot that's going on, the U.S. dollar is the safe haven. That's where they run to. And them running to it causes it to increase in value. You get this credit crunch, you get this illiquidity coming in, and you get this big FOMO move up as everybody tries to rush in there. Because again, if you're a large country especially, and you're paying U.S. debt, you have to pay it in U.S. dollars. And if you can't buy those U.S. dollars cheap, you have to buy them more expensive. So it goes back to what I was talking about, which is you're now paying your hundreds of billions of dollars or hundreds of millions of dollars in U.S. debt, whatever it happens to be, or your billions of dollars in debt, with more and more expensive dollars. That's a big issue. So right now we look like we're moving up here. Right now the dollar needs to really get above. This is the next one right here. This 94.742. So basically I say the 95 handle. If it can flip that and get above that, there's no reason you should be looking any lower. I think right now it's making a good argument for higher, but it hasn't guaranteed anything at the moment. Really want to see it get above that 95 level up here. Let me see here. Hank says, I guess Hank's talking about something here. It says, literally scary how people with relatively naive ideas about how markets work play them with real money, unless there is no longer a use for it or the hype dies down. Because there is no real use for Bitcoin except for trading. Yeah, guys, and right now, understand, I know everybody's pushing when Bitcoin, the store of value narrative. But guys, I want you to be realistic and understand that Bitcoin right now is nothing other than a speculative asset. People buy it because they believe other people will buy it higher. But in terms of a store of value, let me show you something. Let's do this. How does that store of value argument work if you bought up here in 2017 and it was less than what you bought it at there for the next 2 years? That's not a store of value. For anybody that bought in there, that's a loss in value. Yes, if you buy it there and you hold over here and you don't have to get rid of it, yeah, it's eventually gone up higher. But if that's the case, then you would argue that stocks are a store of value, right? Because stocks move right and up, right? I don't think it's a great argument. It's speculation. And if it's speculation, that means there are no guarantees and risk is involved. That's the definition. Look up speculation. And so if there are no guarantees and that makes it a risk-on asset, then during risk-off environments, when the dollar rises, I've showed you guys time and time before, guess what? There's no reason to be in a risk-on asset. You're going to get out historically. So real quick here before I go, let me show you guys something here. I posted this. By the way, if you're not following me, follow me on TX West Capital on Twitter here. I don't post a whole lot, guys, but I'm trying to be a little bit more active on it. But right here, I posted this morning. This first chart right here, this is the DXY versus Bitcoin. Again, notice DXY drops, Bitcoin goes up. The DXY rises. Oh, I'm sorry. Right here. Bitcoin goes down. This is the way it works. And it's not just with Bitcoin. Here's the stock market. Here's the Dow Jones. Notice it moves opposite. Now, in certain areas, depending on how quick things are moving, there might be a similar movement. But what you're looking for is overall what's going on. Again, you get this downtrend here, you get an uptrend. But here we've got this uptrend which is leading to this downtrend here with the Dow Jones. It's not always going to be a one for one. Like the second the dollar moves up, the other thing's going to move down. Gee, sorry about that. But what you're looking for is overall. What is that correlation overall? And everything is correlated to the dollar. It's not that Bitcoin's correlated with the stock market or anything like that. They're both risk-on assets, which means if the dollar's rising, overall they're going to go down because a rising dollar it creates a risk-off environment. People are going into the dollar. It's the safe haven. Everything else is going to lose value against it. But again, these are things I think most of y'all aren't paying attention to or don't know about, honestly. And what you don't know in trading can hurt you guys. That's what leads to buying the tops and selling the bottoms. Buying up here and selling down here. Which is what most of retail does. Let me see here. Marion says Bitcoin is a store of value for governments, corporations, and wealthy. Like I said, I mean, I'm not going to... All I can do is tell you guys this and show you the correlations and show you how things generally work and try to explain it to you, whether you believe it or not, that's up to you. But, again, the idea is just to be aware. Just to be aware here. Like I said, overall, I still hope, again, I'm still bullish on Bitcoin overall. But that doesn't mean I don't see the possibility of at least a pullback here, or maybe even a larger reversal, finishing out some larger correction, as I've discussed previously. But just because I see that doesn't mean I'm bearish on it. It just means that, okay, well, hey, my thought is, again, guys, my thought is if we're pulling back to 10,000, 7,000, heck, even 2,000, I mean, to me, right now, sans anything happening at that point, any kind of government saying, hey, we're going to shoot you on the spot if we find out you have Bitcoin. As long as that isn't happening, I mean, to me, that is the most bullish thing they can do, that pullback. Imagine how much you can make buying at that low again. Remember, we bought in originally in January and February of 2017 when price was closer to $1,000. So imagine getting that opportunity again. Or many of y'all have just come in, or you came in at the top of 2017 and you saw it get close there. You saw the 3,100. But, again, we know most people didn't buy there. We were telling people they should be buying, that it looks like the bottom. We were telling people to sell, in June of 2019. But it's a hard thing to do because we're emotional. We're human beings. And it's hard to buy the fear and sell the greed, right? But the opportunity to buy at such lows, to me, like I said, barring something crazy happening in terms of regulation or something else going on in the world, to me, that would be such an amazing thing. That would be such a bullish event. Because if we got that, then the odds are it's going to go higher than whatever the all-time high is here. So if it's topped out here at around 42, the odds are, if you're getting into 2,000, it's going to go up above 42. And you're making 20 times on your money there. Lots of opportunity in the market, guys. You just got to pay attention to what's going on with it. Eric, what's going on? He says, because there's a limited amount of Bitcoin, when everyone starts to buy, there is very limited amount, which pushes the price up. Yeah, until there isn't anymore. The assumption, I think, with most retail traders right now is that these big guys are coming in and they're buying all this and they're moving off the thing and they're just going to hold it forever. And, some is going to be held. Sure. But I think, again, as I've pointed out, as I've shown you the articles where these guys come in and they say, listen, yeah, we put in 100 million, but we did it because we're worried about the possibility of inflation. So they're saying that's the reason why they bought. And if that is the reason why they bought, then if anything else happens, they have no reason for them to stay in it anymore. They're going to get out. And if the markets start to tumble, and so we come into the bigger idea here, man, I need to go. So we look at the bigger idea. Let's say we're talking about a larger depression coming in, right? And, again, that's part of this whole thesis thing I'm looking at. And so, again, when that happens, you've got deflation. So dollars becoming more expensive. people losing jobs, things happening, production's gone down, so the prices of things are dropping. So now you have the prices of things dropping because there's a lack of interest in buying them. And on top of that, you have a more expensive dollar. That's a double hit to a debt-based economy. So if that happens, how do you, again, I've talked about the possibility maybe of a credit bubble in crypto. So how do you continue to pay on the credit that you've taken out, that you've taken out when you've loaned out your crypto? The loans that you've gotten out from, the loans you've gotten from it, you've put your crypto in as because you didn't want to pay the taxes, right? So you went to Nexo or something like that, and you got a loan based on your crypto, right? And they're holding your crypto. And so if the value of Bitcoin's dropping, you have to maintain a certain margin in there. Either you have to put in more of crypto, or they will sell off enough to get your margin back down where it needs to be. So if you've got all that going on, and in the real world out here, the economy's going down and people are losing jobs, and you don't have money, or you're worried about not going to have money, you're worried about maybe losing your job because your company's maybe going to go out of business because, again, they're producing less because there's less demand. How do you pay off? So you can't, right? So these companies, Nexo and everything, start selling off your crypto. It's all automated. That becomes crypto hitting the market. That becomes supply pressure coming down. And so, again, so that becomes supply pressure coming down on price. So price continues to push down lower. And the lower price pushes, the more people panic and get in and sell. It creates the spiral down there. I mean, I don't think y'all are really thinking about all these things. But all these things are very real with what's going on right now with things. So again, my job here, as I see it, guys, is just to let you know how all these things kind of work out and how they may play hand in hand, and to pay attention when you should be paying attention. That's the goal, guys. I'm not great with time frames. I couldn't tell you that, in a month from now we're going to be going down or something like that. I'm not good at that. I don't worry about that. I note when these larger events are happening, these things, again, looking on the monthly stuff like that, we continue to play the trend as it is, whatever time frame we're playing, but with keeping an eye on that overall thing, what may be going on. You can have, the guys, a bigger idea of what may be coming your way, and, which would be, maybe negative, and still play what's going on locally. You can still do that. So, yeah. What kind of time frame do I put out? Yeah, okay, yeah. So like I said, I don't really have a time frame. We've been noticing these topping actions here since 2018, which is when I've been discussing it. But you have to remember, this grand supercycle top idea is the idea that you've got 90 or 100 years of excess of euphoria and whatever that needs to be wound down before price can come down. So it takes a little bit. It's not going to happen overnight. The key is to continue watching it play out and to continue noting what's going on. So yeah, what happens if the Fed prints its way out of really, really lows? Again, the Fed's printing, guys, you guys have to understand, it goes in, basically, it goes into asset purchases right now and into the Treasury, into their vault, so that banks can use it as on their paperwork where they say, listen, we've got the reserves available to lend out this money. But the banks are the creation. If the banks are not making loans, there is no creation of dollars that's circulating freely. The money that the Fed prints that goes into the vault, that's most of it. That's 60 to 70% of it. It just sits there. It cannot legally be touched. It can't be pulled out and used for anything else. It sits there as reserves for the bank. The inflation comes at the banks. It's where the banks are printing money, where the banks are giving you loans. They're creating dollars. But if they're not, and we know they're tightening their lending standards, we've been watching it all year. And less people we know have been interested in taking out loans. We've seen that. So we've got less coming out in terms of that. But then in addition, we have people paying off their credit, which means they're destroying dollars. So not only do you have a lack and increase of actual inflation, of creation of dollars via banks, but you have destruction of the dollars that are out there because people are paying off their loans, paying off their credit. That's a double hit. So it's not, the Fed can't print its way out of it. Again, read those 2 links I posted in here earlier, guys. The first one especially does a great job of explaining why central banks aren't able to defeat deflation when it comes in, why we have to ride it out. And the other one, again, is from the VP over there at the World Bank, and she's talking about a coming credit crunch. And so with everything, the markets are where they are, I think that credit crunch, that potentially is going to hit this year is going to be the catalyst that, sends it all down. Because everything is so toppy right now. Everything is so, on the edge of a line right now. It just takes a little bit to push it. It free falls. And at that point, not only do you have to now you have to make up everything you just lost, and you have to continue working it up, and it doesn't happen that way. What do I see gold and silver doing? Actually, gold to me looks like it's getting ready for the next leg down. I think gold and silver are going to continue down. I've still got a $900 or so target on gold, an $8 target at least on silver. So yeah, again, if there's a deflationary environment, the value of assets, the value of hard assets are going to decrease because it takes less dollars to buy them. So the value of gold and silver are going to fall, or they should, all things held equal. Because again, your dollars are worth more, so it takes less dollars to buy them, so the value of them drop. So yeah. Do I think we'll ever go back to the gold standard? I don't think so. Governments need debt-based economies. They need inflation to progress faster. Remember, inflation and all this stuff, fiat is fake. It's growth, but that's why we have these large boom and bust cycles, because it's fake growth. I mean, I say fake growth. What I mean is it's growing much faster than it should. And there's a lot of excess that goes into the economy. And so then the bust comes because that excess has to be pulled back out of the economy. So, governments can't continue doing what they do and the power that they proclaim to have unless they have a debt-based economy. They can't do it on a gold standard. They're way too limited. If you're on a gold standard, you can't just print freely. So yeah. But anyway, there you go, guys. I'm going to get out of here. I'm way beyond here, as always. But hey, listen, if you'd like to learn more, guys, you want to keep up more with these kind of talks and daily looks at charts and things and all that fun stuff, come on, join us over here at howtotradetowin.com. We'd love to have you there. You can talk to anybody in there, man. I bend over backwards. We do to try and make everything as great as possible for y'all. Because, I take it seriously, guys. I'm going to tell you a lot of stuff here that you're not going to find online, that you're not going to find from people generally. Because, at the end of the day, it's important to me that you understand. So we'd love to have you there. Other than that, guys, remember, the only thing you control in the market is how much you lose. So risk management is always the most important thing you will ever do day to day as a trader, all right? Your risk management is where you make your money. If you do not understand that, join us, go through my risk management portion of our education, and then ask questions. Because as long as you don't understand, as long as you do not understand what it means when I say risk management is where you make your money, you're going to continue to lose money. So there you go. All right, guys. If I don't see you in Discord, we will be back Friday at 11 a.m. Central Standard Time. We'll talk about Bitcoin, gold, stocks. We'll take some requests, all that fun stuff that we usually do on a Friday, all right? You guys have a great day. Take care. Thanks so much for joining in. I appreciate the discourse and the questions and whatnot. We'll do this again Friday. Have a great day.